Hey guys, it's your favorite MLO 123 here, and I just wanted to hop on here really quick and give you some tips to help you get you mortgage ready for 2023. So with that being said, I am a mortgage loan originator. That's where MLO comes from. And like I said, I just want to help you, give you some tips, talk about 3C's really quick, which is credit, capacity, and collateral. Those are the things that we as lenders, we look for when you are purchasing a house. So let's just dive right into it. So with the credit, um, there are programs out there. They're out there where your credit score can be as low as 500. Yes, 500. And I know some of you are like, what? That means I can qualify for a house? Yeah and no. So with your credit score being a 500, there's going to be a lot of red tape and you're going to have some money. So typically if you have a 500 credit score, you don't have the money. So that's something to consider. And there are programs out there that will go to a 580. Like my company, we will go down to a 580, but just know at a 580, you do not qualify for down payment assistance. I'm not going to say you don't qualify for down payment assistance. Let me take that back. And I just want to put a disclaimer. I am not a financial advisor. I am a mortgage loan officer. That's what I am. So at a 580, there are programs out there we can get you approved for a mortgage, but down payment assistance typically starts around about a 600 credit score, 600 FICO score, 600 mid credit score, FICO score is what you need. Not that Credit Karma stuff, not that Vantage credit score. That means absolutely nothing in the lending world. So you want a FICO middle score of at least 600 if you're wanting down payment assistance. Like I said, there may be programs out there that will go lower, but I don't know them. So I can't vouch for them. So with a 600 credit score, but what I like to tell people is you want to get your score as high as possible, because the higher the score, the better the rate, and the better the rate, the lower the monthly payment, and so on and so on and so forth. So like I said, we go off your FICO score, which is FICO score 2. So you can get a free credit report from annualcreditreport.com, and it will tell you what's on your credit. Now, annualcreditreport.com, I don't know if they're going to give you your scores, but you will have some idea of what's on the credit. Now, as far as what's on the credit, typically we like to see 3 trade lines at least, for somebody who's just starting out with credit. You need to have at least 3 trade lines. And they need to be reporting for at least 12 months, 12 consecutive months, trade lines. So that could be a car note, that could be a student loan, that could be a credit card. And guys, make sure they're on-time payments. That works better in your favor, not 3 trade lines where they're just charge-offs and collections. Is not going to go good for you if that's the case. So you want to make sure there are 3 positive trade lines. And there's some ways to get creative to get trade lines. And I'll be dropping another video about how to get credit ready for a mortgage, because for those of you who don't know, I used to do credit repair. I don't do it anymore. But I can tell you what you need to do to get your credit in order so you can buy you a home. With that being said, I subscribe to Experian.com. And the reason I do is because there's a little button on there, and you click on credit, and then it'll drop down and says scores. You click on scores and you scroll down, and it'll show you what someone would see if you're applying for a credit card, what a lender would see if you're applying for a car, and what a lender would see if you're applying for a mortgage. Is it always spot on? No, but it'll give you a ballpark figure of where you are. So when you're going into trying to get financing for a home, you have some type of idea of where you stand. Do not go to Credit Karma, because that is a Vantage score and no one uses that, and that's just useless, and I don't even know why it's here. Okay, so you want to get your FICO scores. And like I said, you want your score as high as possible, because the better the score, the better the rate, the better the payment, blah, 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 blah. But you can get approved at a 600 credit score. So with down payment assistance, if you're needing down payment assistance. To go back to that with the down payment assistance, I want to make it clear that down payment and closing costs are two separate things. So when you're going to look for a mortgage, the first thing you want to do is get with a lender. You want to get with me, a lender, so you can know what your purchasing power is. How much buying power do you have? And with that buying power, I will give you a letter to give to your realtor so they know that they're not going to be taking you out looking for $700,000 homes and you qualify for a $300,000 home. So that takes care of that. And like I said, that closing costs and down payment are something different. Your realtor, when you find the home that you want, you're going to put down your earnest money. Okay. Down payment, let's just do some simple math. FHA will allow you to do 3.5%. So will conventional for a first-time home buyer. So are your primary residence. So 3.5% down of $100,000 is $3,500. Okay, so that's your down payment. Now, if you're getting down payment assistance will take care of that $3,500. But you're going to have to pay. You are going to have to pay. You are going to have to pay your closing costs. Can you get a gift from a family member? Yes, you can. But we'll get into that here in a minute. So you're going to pay for closing costs. I like to tell people it's normally going to be about 5% of the loan amount. So 5% of $100,000 is $5,000. So you're going to be looking at about $8,500 that you're going to need to bring to the table if you're not getting down payment assistance. Down payment assistance will take care of the $35,000, so you'll be bringing the $5,000. Okay, got it. Simple math. So closing costs are fees outside of the loan that have to be taken care of at the time of closing. When you're signing your signature for that mortgage, that money has to be wired to the title company. So that's going to be your title fees, your recording fees, your lender fees, processing, underwriting, appraisal. Sometimes you pay for your appraisal up front, credit report fees, all those fees, taxes and insurance, because you're going to have to pay a couple of months in advance for taxes and insurance. You're going to have to, if you're putting less than 20% down, depending on what type of program you're going to have private mortgage insurance or mortgage insurance. So mortgage insurance premium, MIP or PMI, either or. You're going to have to pay a little bit of that upfront outside of the loan. So you have to have that money ready. Sometimes they will ask you to have a couple of months reserves of your whatever your monthly payment is going to be. They want you to have that in reserve. So that is something that you will have to pay for. Now, I said about a gift. So say that you getting down payment assistance and you don't have all that money, and your mom wants to write you a check. You know what? As a housewarming gift, I'm going to pay your closing costs. Okay, so mom writes you a check for closing costs. Guess what? We're going to need to see mom's bank statements, because they want to make sure that you're not taking cash, giving it to mom to put into her account to just give back to you to cut out that money. Basically, we can't use mattress money. We cannot use mattress money. So you want to, if you're going to buy a house and you know you're going to buy a house, they're going to ask for a 2 months bank statement. So go ahead and just put that money in the bank. I'm not telling you to put mattress money in the bank, okay? I'm not telling you that. But if you're going to get a gift, so that way you don't have to get letters of explanation and get family members' bank statements, because that's like they don't want to give their financial information out. So that's one way of doing it. Now you can get into your 401k. A lot of people, a financial advisor will probably advise against that. But that is a way to pay for your home. And I look at it this way. Buying a home, you're building generational wealth because there's a lot of perks that comes with being a homeowner. So I'm like, go ahead and bite the bullet. I mean, to each his own. Like I said, I'm not a financial advisor. So there. Now let's get into the capacity. Capacity to pay it back. You want to, but what we're looking for to make sure that you can afford this home and you have the means to make this payment every month on time. So we're going to look at what's called your DTI, your debt to income ratio. So typically if you're getting a conventional mortgage, they don't want you to go over 45% of your back end debt to income ratio. So your back end is going to be your mortgage payment, car payment, student loan, your typical bills, everyday bills, credit cards, things of that nature cannot go over 45% of the amount of money that you're bringing in. So the way you can calculate that, okay, I make XYZ divided by your monthly bills, and it has to be 45% and under. For FHA, it's normally 50. So just keep that in mind. They want to be able to see that you can make that monthly payment. They're also going to ask for you if you are a W-2 employee. We are in 2022. So if you was to apply for a mortgage today, they're going to ask for your 2020 and 2021 W-2s, as well as your a month's worth of income, pay stubs. So if you get paid weekly, we're going to need 4 pay stubs. If you get paid bi-weekly, we're going to need 2 pay stubs. So to be able to prove that you can afford this mortgage. Now for my self-employed people, they are going to ask for your 2021, 2020, and 2020 tax returns, and they may ask for 12 months bank statements from your business. So that is something you need to have on hand and ready to go if that is something that's going to be asked for. We do always ask for 2 months bank statements when you're applying for a mortgage. So you want to make sure you don't have any NSFs or any large amounts of money being deposited into your account. Again, we're trying to make sure that you are not laundering money, washing money, things of that nature, or any large deposits going out. So be aware of that. So be very cautious of your spending habits because they are looking at your spending habits in that 2-month time frame. So that is one thing that they will also take a look at. So that's going to be a month worth of income, 2 months bank statements, and your 2 years W-2s or tax returns is what we're going to need to, and there'll be other things. Typically underwriting is going to stip you for something else, require something else in the loan, and they'll, let you know. But up front, those are the things that we're going to need up front in the approval process. And after that, let's just get into the collateral. Okay. The collateral is the home. That's what it is. It's the home. And we just want to make sure that we are lending on a property that, God forbid, something happened and you were not able to keep your home and it forecloses, that we will be able to recoup the money. So I know prior to 2008, there was some shady stuff going on in this industry. We're not going to get into that because we're no longer there, but we just want to make sure, and we do that with an appraisal, that the home is valued at what it said, what